and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is your show where you get all your stock-related queries answered by the experts. So do get ready. But before coming to that, Cheryl, feels like the markets are also cheering up the Friday mood.
Absolutely, that's how it looks like today. Shrishti, a very good morning to you. And let's not forget, it's Friday today, which means that right after the market check, you will have Kunal teach you something new in BNSN Pathshala. But talking about the markets are absolutely flat right now, doing absolutely nothing. But with the positive bias is Nifty Bank that is outperforming the benchmark indices and almost 0.8% uptick coming in for the Nifty Bank as we speak. So talking about the list of gainers, today you have HDFC Bank, Tata Motors, Coal India as well as HDFC that are bucking the trend. But on the weaker side, you have HUL that is reacting to its numbers, also the royalty being hiked. You have Asian Paints as under pressure post its earnings yesterday. JSW Steel ahead of its earnings is under pressure in today and followed by Nestle as well as SBI Life. These are the ones that are actually losing out in trade today. Talking about specific sectoral indices, it is the FMCG index that is under pressure. That is undoubtedly given the fact that what the FMCG names are doing today. Metal also under a tad bit of pressure, but on the winning side, it is PSU Bank Index that is gaining the most. But let's not waste time on what exactly is happening on the markets front, because we have Kunal, who's all geared up to talk about the BNSN Pathshala, isn't it, Shrishti?
Well, yes, absolutely. So let's get across to Kunal itself and know what is the interesting topic for today. Over to you, Kunal.
Thank you so much, Shrishti, Cheryl, both of you. So today's topic is more of a continuation of the earlier two sessions which we've done for the reversal pattern. So, earlier we were discussing the bullish hammer pattern and then we discussed the inverted hammer pattern. Today, I've taken the third candlestick pattern, which is a bearish engulfing pattern. So this is more to do with stocks when they go into a reversal phase from the top after a phase of a rally. Now this is what a typical chart looks like. When a stock goes into an upward trend, this is the pattern which develops where a stock or a candlestick pattern which manages to cover the body of the entire previous candlestick pattern. The color of the patterns is negative. By red candle, it means that the day the stock closed with this kind of a price movement, it closed into an extreme negative point and it covered the previous trend for the stock on the bullish side completely. This results into a stock actually going to a downward trend. So the initial trend is a most slow, steady and a drag on the stock, and then the pace of the intensity or the intensity of the fall corrects for the stock price. Now we look at a couple of examples of how these reversal patterns they actually look on the charts. Now this is the first stock, which is HCL Tech. Just about some time back, in the last year when the stock was at 1300 odd levels, this was the bearish engulfing pattern which was developed for the stock. So as you can see, earlier there have been many instances where the stock could not form a classic bearish engulfing over here. This was a partial engulfing, this was again a partial engulfing, but this was the candle where the stock actually formed a full bearish engulfing pattern, and you see the prospects for the stock post that it went into a selling pressure, minor bounce, but then the selling pressure intensified for the stock price. And a similar example was also seen in Bajaj Finance in the next slide, which you will see that how the stock formed such a similar kind of a bearish engulfing pattern. This was the first time when the stock had actually formed a bearish engulfing pattern. The stock went into a downward trend, and the second time when the stock formed a bearish engulfing pattern, which was around 3,700 mark some time back. Look at the sharp intensity of downtrend. The stock in just a matter of 1.5 odd month corrected by more than 20%. So that's the power and that's the intensity of how bearish engulfing pattern, which are widely known as the strongest reversal patterns, indicates on charts.
All right, so that's something new that we've learned in today's BNSN Pathshala, and that is the reversal trend, reversal trends, and that in that we've learned about bearish engulfing pattern. But let's take a note of what the markets are doing right now, and like I mentioned, it is pretty flat when it comes to the markets right now. We are drifting lower, actually testing that negative territory as we speak. A lot of companies have actually come out with their earnings in overnight post yesterday's market hour. So take a look at what HUL is doing at this juncture. Take a look at L&T Technologies. You also had Emphasis that came up with this number. Let's not forget what Coforge is doing in trade today. Coforge is a stock that is actually buzzing in trade today. Remember that Coforge came out with their earnings early this morning, and they've gone ahead and raised their constant currency revenue growth guidance for FY23. However, they've maintained that margin guidance. So on back of that, you have Coforge that is actually right now near the day's highest point, seeing an up uptick of approximately 6% as we speak. Apart from that, you have Anant Raj also that reported his earnings in an overnight trading session. You had Intermesh also. That one also is seeing a good uptick. The Q3 profits have seen an uptick in the quarter gone by. So you have India Mart, Intermesh also that is buzzing in today's trading session. Let's talk about the stocks or the counters that are all set to report their earnings later today. So one of them is definitely Reliance Industries. Late in the evening is when we'll expect Reliance Industries to come out with its numbers. So all eyes on Reliance Industries. Talking about the counters that have reported their earnings, take a look at Polycab. Look at their earnings in the quarter gone by. The revenue has seen an uptick of about 10.2% on a year-on-year basis, coming in at around 3,715 crore rupees. Margin has also seen an uptick on a year-on-year basis. So let's bring on board the management of Polycab to understand what actually worked for them in the quarter gone by. We are joined by Mr. Inder Jaisinghani, who is the chairman and MD at the company, as well as Mr. Tongya, who is the CFO at Polycab. A very good morning, gentlemen. Thank you so much for joining us on ET Now to talk more about the quarter gone by for you. And given the growth rate in the quarter that's gone by, it has actually reduced versus the first half of the financial year. Are you actually witnessing any slowdown or sluggishness in the demand going ahead as well?
No, demand is increasing. On the contrary, demand is not slowed down.
Right. So you had highlighted in the last quarter that good demand was seen in tier 2 and 3 cities. Now that the demand how has the demand been in the tier 2 and 3 cities, this compared to the metro cities? If you could give us some highlight on that.
Yeah, tier 2 demand, tier 2, tier 3 is increasing, divided because that is more today the buying power is more in 2 tier, 3 tier because prices of properties are reasonable and metro cities is too high, but even the demand is both the places are very good.
Okay, Gandharv, coming to you, if we see the copper and the aluminium prices, they have continued to be volatile. Have you passed on the increase in the copper prices, and what is the outlook on the RM cost going ahead? Because for now, we have seen your margins expanding on a sequential basis, also on a YOY basis. But give us a sense how it is going to expand going further.
Yes, you are right. There is a significant volatility both in commodity prices as well as USD and exchange rate. But we have very effective hedging framework and pricing mechanism in place. And if you see, there is no change in our contribution margin from second quarter to third quarter. On the contrary, the EBITDA percentage has increased because of better operating leverage. You would have noticed that our first 9 months are best ever in terms of revenue, EBITDA and PAT. The third quarter was best ever third quarter in the history of the company. And the profitability has improved significantly, and this can be correlated with the fact that the current year first 9 months numbers are better than full year financial year 22 numbers as far as profitability is concerned.
Right. Let's talk about your margin. If you see on a year-on-year basis, you've definitely seen an improvement in the margin figure. But if you could tell me, are these margin levels sustainable going ahead, given that we are seeing a lot of volatility in raw material costs, isn't it?
As I mentioned a while back, we have a very effective hedging framework and pricing mechanism in place. In cable and wire business, which is almost 85% of our total business, we generally maintain EBITDA margin of 11 to 13%, and we are confident that we continue to maintain the same range. In FMEG, slowly and gradually, we should be able to get to 10% of EBITDA margin by fiscal 26. So year after year, there should be improvement in FMEG EBITDA margin.
But in the coming to you, the growth in your fast-moving electrical good, that is FMEG business, is still flat on a YOY basis, although it has seen a growth of 12% sequentially. But going ahead, what is the growth expectation on this front?
Now growth is, we are this year going to complete as per last year only. But now we are doing a lot of changes, which is going to be the really growth rate from the next year quarters. From first quarter, we are going to show good growth. In the coming 1 year, I think so we'll take a growth of at least 30 to 35%.
Let us talk about the future plans for Polycab. We've seen that the 5G has been rolled out by various telecom companies now. Are you looking to delve into the telecom space?
We already have very significant presence in telecom. We have worked with Government of India initiatives and supplied optical fiber cable both in Eastern India as well as in Western India last 3-4 years. And we are totally geared up to meet the demands of 5G revolution, which will impact the country in the most positive manner in years to come.
Okay, so totally geared up to take the opportunity ahead in terms of revenue front when it comes to the 5G. Thank you so much, Inder and Gandhar, for joining us today on ET Now and helping with the growth outlook for Polycab India. After a good set of numbers yesterday, the stock was up around 3.5%, but for today, seeing some bit of a profit booking. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back, and then it's the time to take all your stock-related queries.
Welcome back. You're watching BNSN on ET Now, the show where we get you answers for all of your stock-related queries. Remember that we are live on YouTube, Facebook, as well as on Twitter. You can also connect to us via the WhatsApp. Yes, we have a lot of viewers who've connected on YouTube and are actually told us that there is an audio issue with our feed. We are trying to get that rectified. So that's a note for all of our YouTube and all the viewers who are joining via that to us. And also we have our experts today. We have Kunal Bothra as well as Vijay Chopra joining us on the show. Very good morning to you, Kunal, as well as Vijay. Thank you so much for joining us on ET Now. And Vijay, before we kickstart with the queries, we want to take your view on what should retail investors do in order to protect their wealth.
First of all, good morning. Thank you for having me on the show. I think that budgets are the markets are looking for the budget, the upcoming budget on 1st of February, and there is some kind of a fear that there might be some kind of a tinkering happening with the long-term and short-term capital, or maybe there's some STT to be levied on the options trade. So we are seeing that neither the DIIs nor the FIIs are taking any direction, and we see a very small figure, 200-500 crores of buying and selling every day. So I think that it's one of the most important economic event. So I would say that once you should at least have 30-35% of the capital with you right now, book profits and keep cash in your hands, be ready for the budget. And so we can take a directional option, whatever the budget suggests, and we can think about various sectors, stocks, whatever the Honorable Finance Minister says. But I think that if at all there is some kind of a tinkering with the taxation, markets might tank, and that would be a good opportunity to get into good stocks.
The expectation, what the markets are looking forward to in the budget, what is the market buzz around, and going ahead, it's a good time to actually book profits and then stay put and get ready for the budget action ahead. But let's move on and kickstart taking all your stock related queries. And the first question that we have coming is from Sunil. He's from Muscat, and Kunal, coming to you, he's actually a long-term investor, but he has already entered into United Spirits. He is holding 500 shares at a price of 835. He's also looking to buy more and double the quantity in this particular counter. What will be your advice?
So you can look to hold on to the stock. I think it's just exactly at the price which you've bought, 830, 835 is where the stock is trading right now. It seems to be that the stock is coming out of some sort of a correction. So 940, from 940 to now 840 approximately for the stock, which means more than a 12% correction for the stock, which has already happened in the last 1.5 odd month. But then I think I'll probably wait out for maybe another week or so, let the stock stabilize at this 830, 840 mark. And if it doesn't fall significantly and the indicators stay where they are or slightly better, then we can probably anticipate that the stock may have formed a medium-term bottom. So I would just suggest to hold on to the stock as of now. No need to average or add, possibly another week or so. If the stock holds on to this 830 odd levels, then you can look to average or add.
Right, this one has come from Satya and Kunal. This one also is for you. He wants to know when is the right time to add Asian Paints, HUL and Tata Power in one's portfolio. If not now, then when? Either one of them.
So Tata Power, I think I've been advising quite consistently over the last many years that below the 200 mark is a very good level to accumulate the stock. I think over the last 1.5 or 2 years, the stock has time and again tested that sub 200 mark and it's bounced back quite strongly from the sub 200 level. So that establishes a strong demand zone for Tata Power. Asian Paints, especially after this last 3 months of correction from 3,500 to now sub 3,000 levels for the stock, it indicates that the stock is now entering into an oversold territory. So, when a stock enters into an oversold territory, the process of a bottom formation may take at least 3 to 4 weeks. But the price damage is less as compared to what it is in the earlier stages of correction. So, I think if you are in from a medium-term play, buying the stock at current levels as well as on every minor dip, 50, 100 points could be an opportunity for you to accumulate.
Okay, moving on to the next one, Vijay, coming to you. Nagaraj from Bangalore is holding 3,000 shares of Tejas Networks from a price of 260 rupees. More than a doubler for him. He's sitting at great gains and looking to book some profits out here. What will be your advice on this? And if yes, then what are some of the other options he can look forward to?
Well, I think that he can hold on to the stock with a stop loss of 500. And Tejas is involved in 5G, and we are going to see 5G rollout very soon. It has already started in a very small way, but again, the business would grow over a period of time. So no need to panic as of now. The stock might come back, but keep a stop loss of 500 and keep on holding the stock. I think that if at all he wants to shift, also, or maybe a part of his investment, if he can, he wants to shift, he can probably get into a TCS or a Tech Mahindra or an HCL Tech. So these are good stocks to nibble into right now. I think that there would be no major impact of the budget on the IT companies, because I don't see anything negative coming. The stocks have already corrected 40%. So don't see much damage or any kind of major impact on the IT pack. So seemingly it is a bit safe to be in the IT space. So if at all he wants to even shift his investment somewhere else, so IT is a good option.
Okay, Kunal, Manish has 100 shares each of Lodha, which is purchased at 1,060, and Varun Beverages purchased at 1,160 rupees per share for the next 3 to 6 months. What's your recommendation? Should he continue to hold on to it, look to add some more, or exit from these counters? Also, if you could share some levels that he needs to watch out for.
So Varun Beverages, I think you should look to book profits. That's my analysis, because my belief is that the stock is getting into an overbought, already got into an overbought territory, and it may probably see a further leg of downtrend. Wouldn't be surprised if the stock actually forms a bottom, which could be just around the 1,000 odd mark for itself, possibly in the next 2 to 3 months. So if you are okay with that, then I believe maybe booking out profits over here and then buying the stock maybe closer to that 1,000 odd mark would be a good strategy for Varun Beverages. I missed out the other name.
It was Macrotech Developers.
Yeah, so again, that's a stock which I think is heading towards a breakout. So what's actually happened is that most of the real estate stocks, DLF, Oberoi Realty, Macrotech Developers, these stocks have gone through a time-wise correction in the last 4 months. So you try and look at the last 4-5 months, these stocks have been absolutely sideways, confined to a range of I think 5% to 7% broadly. And I think it's a good time where most of these real estate stocks can actually make a strong comeback once the risk appetite comes back in the market. So I think in that regards, you can hold on to Macrotech.
Okay, moving on, Vijay Babu from Chennai is looking for a fresh investment in PTC India at the current market price of around 107. He finds the dividend yield quite attractive, and also this counter has been in the news recently on a stake sale where big names are emerging. What's your view on this?
No point. First of all, fundamentally no problem with the company. It might see an acquisition. There's no problem. But again, technically speaking, the stock has left many gaps because it has, opened up on a circuit and it has moved far away from the 200 DMA. So I would say that I don't see that one should get into a stock right now. Wait for the stock to correct. If it comes around 90 odd, it would be a good time to get into the stock again. But right now, I think that there would be huge profit booking which might pull down the stock. So no point of getting right now into this, but wait for the correction to happen.
This has come from Vishal, and he wants a long-term view on KEI Industries as well as Wipro. Is it good time to add some more shares of these counters at current market price? I believe Vishal is already invested in these counters. What's your view on this one, Vijay? Either KEI Industries or on Wipro? Should he add some more in his portfolio?
So as I said, IT looks safer, and even with the budget perspective, although KEI is also a very good company, but I would recommend that if you want a long-term perspective, Wipro has corrected from the highs of 600 odd, you're getting it at 400 odd, so almost 50% down from that place. So Wipro is a good option to get into right now, and hold on with a longer term perspective. It will go back to 600 because these are big wigs and they have weathered the storm. So these companies are known as bellwether companies. So it is a IT bellwether. So invest in Wipro right now.
Moving on to the next one, Vijay Veni is holding Adani Ports 90 shares at a price of 905 at a huge loss. What will be your advice? Because recently all these Adani group of shares have been under pressure. Any hopes on recoveries going ahead?
Well, I think that it's one of the businesses I like in the entire Adani pack. It has real value attached to it. The kind of assets this company has is very good. This is both on the west and the eastern side of the country, so it can cater to a lot of traffic from both sides. So I would say that don't worry at all. If at all the stock tanks even around, if you can manage to get it or average it around 760 750, it would be even better. Bring down your cost price. But yes, I think that Adani Ports would surely come back, and it is one of the strongest balance sheets in the entire Adani pack.
Next query is for you, Kunal, a tricky one coming in from Dhananjay, and he's planning to take a short-term trade into some of the oversold stocks, and the names that he's mentioned is Aarti Industries, Bajaj Finserv and Galaxy Surfactant. As per charts, he wants to know which one has the highest probability of making good profits.
Out of the three, looking at the chart so far, Galaxy Surfactants is the stock which I would believe is come back towards a major divergence zone from the 200-day moving average. So 200 DMA is at 2,900 approximately, stock is at 2,350, which means a divergence of almost 20% approximately for the stock from those averages. There is minor change or minor bullishness which has occurred in the momentum oscillators for Galaxy Surfactants. So that could probably be one of the reasons why I would believe that if there is any possibility of these oversold nature stocks making a comeback, I think it could be Galaxy Surfactants first.
All right, on that note, actually, we'll slip into a break on this edition of Buy Now, Sell Now. But viewers, stay tuned. We'll be back with more queries after the break.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries. And Vijay, coming to you, the next question is from Hanu Madhu, and his query is on IRCTC. He's holding 270 shares at a price of 668 rupees. Every other day we keep getting query on IRCTC, but he's currently at a loss. But for today, the stock is up around 1.8%. Going ahead, any hopes on further recovery in the share price?
Yes, because the stock had seen the brunt because practically everything was closed down during the COVID, and then it has actually not gone anywhere, not done anything much. But yes, I have a very strong feeling that this company has the capability of coming back very strongly. Keep on holding to the stock. And technically again there's a gap at around 700 which it will definitely cover, so that is the area where I'm looking at. So if you want to even book profits, you can book around 700 720, get into some other stock. But yes, as of now it seems to be in an uptrend.
Kunal, next query is for you from Jaya Krishnan, and he wants to buy Polycab for the medium term. He wants to know what's the safe entry level for this counter.
Not sure safe entry level, but then I think a better entry level for Polycab would be in case if the stock corrects towards 25-20 mark. It's almost 10% higher from those levels. But then when I look at the monthly charts, when I look at the last 6 months of chart patterns, the 2500 mark, 2500, 2520 mark has been the zone where the stock has taken a multiple support for itself. So I think if you're looking at a classical entry point, then I think 2500, 2520 could be a good entry zone for Polycab.
Okay, moving on, Kunal, once again coming to you, Sonali from Kolkata has written to us. She is holding 1750 shares of Dishman Carbogen at an average price of 111, currently at a loss, but she can still hold this counter for the next 2 months. What's your view? And other than that, another query is on Sona BLW. Good levels to enter at this price for a short-term perspective.
Well, Dishman Carbogen, I think, the stock has been just going into a corrective mode since last 2 years. The previous high for Dishman Carbogen was around 240, and it's now corrected more than 50%, more than 60% in fact, in this last one and a half odd year for itself. And even the prior chart patterns have been not very encouraging for the stock. So I would suggest that frankly you should look to exit these kind of stocks. Maybe use minor rallies, minor bounces which may come along the way for the stock price. On the other hand, Sonacom Star is also one of the stock which is going through a sharp correction. The best way to try and wait out for buying these stocks, if you're looking to add on to Sonacom Star, would be on confirmation of a breakout. Now, for example, over the last 1 year, the stock earlier made a high of 800, then the high dropped to 700, 650, and now the recent high for the stock was around 450, 460 mark. So wait out for a point where where at least the nearest high gets taken out, which should be at 450, 460 mark for Sonacom Star. That would be a point where we may probably look out for the stock forming a near-term bottom as well as the stock getting into a reversal mode. So as of now, just keep it on radar, but above 450, 460 is only where you should look to buy.
All right, another one coming your way, Kunal, and this one is coming from Santi, and this is on Clean Sciences, 33 shares at a price of 1,555 rupees per share. Wants to know if the fall is limited in the counter and it makes sense to accumulate this from here on for the medium to long term view.
Yeah, the fall seems to be now getting stalled for the stock price, but I'm not sure that whether just a stoppage of a fall or an arrest of a fall would immediately lead into the stock going into a resurrection mode or a rally mode. That's the only concern which I have with such kind of stocks. Now, it's always better that you try and wait out for a point where these stocks give a confirmation of a turnaround. So for Clean Life, I think 1500, 1520 mark could be a breakout point for the stock price. That would also coincide with the breakout above the 50-day moving average for the stock as well. So I would suggest to buy above that 1500 mark.
Okay, Vijay, coming to you now. Padma Lalita wants to know your take on two counters. Firstly, it's Manappuram Finance. She is holding a decent quantity, 1,000 shares at a price of 155 at a loss in this counter. And the other one she has is 1,000 shares of Pioneer Embroideries at a price of 66. She wants to know, is there any chance to get back to these levels? I'm not sure whether you track the other one.
Yes, Pioneer, I do not track that much because it's a very small company. But I can give you my comments on Manappuram. Now, we have to understand the way gold has moved and how these, gold NBFCs work. So they generally lend out about 60 to 70% of the gold value. And whatever collateral is there with these companies, the value of the collateral has gone up. So they are doubly insured in the sense that the default rate is going to be, practically zero. Because generally don't see much default because they are anyway lending against gold and the value has definitely gone up. So I think with the longer term perspective, gold looks very good to me. And I've been mentioning this, gold, silver are in a bull run for at least 2023-24. So I think that, these gold finance companies should do well, Muthoot as well as Manappuram. So keep on holding. And if at all you see a fall, average it out. Maybe 104, 105 would be a good level to average if at all the stock falls to that level. And I think that you will get your buying price very soon.
Kunal, Swayam has written about RVNL, 4,000 shares at a price of around 19 rupees per share. Now he wants to know whether he should look to exit this one because he wants to enter Reddington. Do you think that it's a good strategy, exit RVNL, invest in Reddington at current market price?
So again, congratulations to the viewer for buying the stock at an early stage and then holding on to the stock price. I think it's almost given returns of 3x, 3.5 to 4x from your initial entry price of 19 rupees. I think at current levels, it could be a good strategy to maybe take out 50% to 60% of your profits and then put that money into a stock like Reddington. Reddington has been one of the better performing names from the mid-cap IT stocks. So I would suggest that that switch could be good, but then not allocating the entire capital, but maybe a 50-60% profits from RVNL and shift that towards Reddington.
Okay, Vijay RK Ahuja is looking for fresh investment in Mazgaon Dock. In 2022, we have seen a stellar move in this particular counter, but does this still look good to you for fresh investments? And he also wants to know the entry level for this one.
Well, I think that if you want to stay in the same industry, although it's very good, defense, I think should do well with at least 5 years perspective, as India is becoming the defense hub for a lot of countries in Southeast Asia, Africa. So I think that he should think of Cochin Shipyard, which is looking very good on the charts, and it has corrected much more than Mazagaon Dock. So similar kind of a company, similar business. So I would prefer Cochin Shipyard to a Mazagaon Dock. And Cochin, if you buy somewhere around here, 510, 11, can go up to 600, 650. So just change the company, let the sector be same. So I think I'm more comfortable in Cochin Shipyard.
Next one is coming from Costa for you, Kunal. Technical view on Colgate-Palmolive. Is it a good stock to buy at current market price for the long term?
Well, I would suggest to wait out for maybe some more time. The stock is still going through a corrective phase, 4 straight weeks of correction. This is the first week, in fact, 5 straight weeks of correction. And this is the first week where the stock is seeing a bounce. But then the pressure of the last 4 weeks of correction has been very steep. And the bounce, so far this week has not even led to a breakout of the previous week's high for the stock price, which means that possibly another couple of weeks of correction could be due into such kind of names. So maybe the near-term bottom is not in place for the stock price. So I believe in that regards, it's always better to wait out for maybe another week or so.
Okay, Vijay, Subrata Ghosh is already holding 6,000 shares of JNK Bank at a price of 57. He is looking to add more in this particular counter. What will be your view?
Well, I think that stock still has some steam left. Possibly it can go up to 70 odd, but yes, it has become expensive. So if at all you already are invested in the counter, keep on booking profits beyond 60 rupees. And if you want to, invest afresh, I think that 5-10 rupees I see in this counter. But there would be definitely a profit booking coming, and that would be a good time to again nibble into the stock. If at all it corrects to about 40 odd, it would be a brilliant buy.
Next one is for you from Padma Balan, and Tata Communications at a price of around 1,250 rupees per share, Zensar Tech at a price of around 250 odd rupees. Should Padma continue to hold on to these counters or look to shift to a large cap altogether?
Well, I think these are good stocks where you've been holding on to Tata Communication as well as Zensar. Tata Communication has been into a good uptrend in the last at least 1 year approximately. Zensar has been into a downward trend, but I think the stock seems to have gone into a time-wise correction mode, which means that the selling has stopped and now the stock is going through time-wise correction. Possibly a near-term reversal could be at play for Zensar Tech as well. So I would suggest to hold on.
Okay, Kunal, the next one is for you. Anand from Gurgaon is holding 90 shares of Asian Paints at a price of 3,180 rupees. Definitely at a loss after a rather mixed set of numbers from Asian Paints. The stock is today itself down 2%. What's your advice? Good time to average out for medium term?
Well, I would suggest to maybe wait for another week or so. I would believe that whenever the stock breaks past about the previous candle swing high. So, for example, yesterday the high made for the stock was around 2970 mark. Today the high made for the stock is around 2848. In case if the stock drags say for another couple of days, and the high comes to the previous swing high comes to maybe 2850 mark or 2800 levels, that would be a classical point for you to buy. So I would suggest to wait out for another couple of days, but then buy when the stock breaks past about the previous candle day high.
Okay, so that's the view coming in on Asian Paints. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back.
Welcome back, and you're watching Buy Now Sell Now on ET Now, and let's shift focus now to earnings. And you had Happiest Minds also that had come up with their earnings. If you look at the constant currency revenue growth, it was about 2.8% on a quarter-on-quarter basis. The EBIT margins have come a tad bit lower on a quarter-on-quarter basis, 21.7% versus 22.8%. And as you can see, the stock is actually at the day's lowest point. Let's bring on board the management of Happiest Mind to talk about the earnings for the quarter gone by. We have Mr. Venkataraman Narayanan, who is the Managing Director and CFO, as well as Mr. Joseph, who is the Executive Vice Chairman and the CEO of Product Engineering Services at Happiest Mind. Very good morning to both of you, gentlemen. Thank you so much for joining us on ET Now. And let's talk about your earnings and the numbers. In the 9-month, if you look at the 9-month revenue run rate, it has been around 26%, and this is against the guidance of 20 to 25%. Will it be fair to say that you will beat your guidance?
Yes, the expectation is that we will beat the revenue guidance or meet the revenue guidance for sure, and also the EBITDA guidance of 22 to 24%.
Okay, Mr. Venkatraman, once again coming to you. Now, despite the operating leverage, your margins have slipped this quarter from 23% last quarter to 21.7% this time around. Could you call out what impacted your margins and how do you see them going ahead?
First, our margin guidance was 22 to 24% of EBITDA. We are at about 26 plus percentage right now for the 9 months, and we are at 26% for the quarter. So if you look at it at the EBITDA level, we have been pretty much there vis-a-vis previous quarters and the previous year. As far as looking forward, our guidance, we will hopefully hold it to the same 22 to 24%, primarily because, like I've said in the past, we would like to invest into sales, capability building, and maybe even into customers as required, which is why we keep that room of about a couple of percentage points, and we are still not changing our margin guidance to upwards of 25%, even though we have done that for the last 10 quarters in a trot. With the cost front, on the cost front, people cost can be expected to drop a little in terms of the increase. The increase a little bit more moderate compared to what we have seen the previous year, primarily because of the demand situation and the attrition situation. But we also could see, some more moderation on the exchange rate. Last year, whatever cost increase was there, we could defray quite a large part of that through the favorable exchange rate that we had.
Right, Joseph, let's talk about the client conversations. If you could tell us how it's trending with regards to what sense are you getting with regards to the cancellations, client budgets, or even delay in decision making?
So I think what we've seen is, December was a time when the clients went through their budgeting cycle, and they've taken a careful look at their priorities and projects. And what we are seeing is that they're prioritizing initiatives that have either a strategic or immediate or quick return, and making sure that they're not releasing the entire budget right up front. So we've not seen any cuts, but they're sequencing their spend and not giving the entire budget to the owners to make sure that the money is spent in a very judicious manner. So I would say there's a cautious optimism in the market, because if you really look, the inflation rate has come down without really impacting the job market much, which shows that hopefully the soft landing that we were talking about should be possible, and that the Feds may moderate their rate hike. So that's what I'm gathering from meeting with customers. But everybody is keeping a very close watch on macroeconomic conditions to make sure that they can act quickly if required.
Okay, coming back to you, Mr. Venkatraman. So you talked about the acquisitions as a lever. While you can't give us specifics, tell us which geographies, capabilities, or size are you targeting for acquisitions?
We are reasonably confident of closing something soon enough, because we have a reasonably strong pipeline and we are in discussion with a couple of companies, but nothing where we have signed on the dotted line. And unfortunately, we are not allowed to disclose until we sign, because things can go either way. So I would say watch this space is what I would say, but we are consistently looking at companies. We've had successful attempts and reasonably unsuccessful attempts in the past, and so being cautious about making a disclosure on that front. As far as companies that we are looking at only digital services companies with a strong offshore presence or an India presence. So essentially, we are looking at the India, US axis, India, UK, Europe axis, anything with an offshore presence, because a company with an offshore presence gives you that benefit of long-term customer relationship. At least that's what we have seen, and also it's easier to acquire and also integrate.
All right, then, gentlemen, we leave it there. Thank you so much, Mr. Venkataraman, as well as Joseph, for joining us on the show to talk about your earnings. And with that, we are out of time on this edition of Buy Now, Sell Now. Goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching.